love the channel and find it useful in becoming a happy retiree. Subscribe today. All right, we're going to go to the phones here. John joins us from Brookhaven. John, what's up? Good morning.
Good morning, Wes. Thank you for your services and all that.
Yes, sir. Thanks for listening. How can I help?
Well, my income total is, I'm retired. I'm 68 years old, single, don't owe anything or that nature. But anyway, my total income.
These shows, I love the tax show. Every time you give us a little information. I'm John from Brookhaven. I'm single. It sounds like the beginning of a dating show, doesn't it? We're talking about. I own my house. Here's my income. Anyway, so what's going on? So your income around what again?
47,000 before taxes, about 40 after. I have nothing, owe nothing, and this, that, and the other. Just wondering if the Trump administration is going to bring me some more income.
We'll see. So you are over 65. Do you itemize right now your taxes and deductions or no?
No, I just do the short form.
And then roughly, so it really doesn't matter on your property taxes then. So I can tell you right out of the gate, remember your standard deduction, which is one of the biggest variables in this tax change coming in 2018, doubles. So if you're single, we're losing these personal exemptions, but because the standard deduction is doubling, it helps out and makes up for the loss of the personal exemptions and then some. So I've got this calculator. We've been using it, and the reason I've used it, we've tested it and cross-tested it on a couple other tax calculators, and they've maintained it, from what we can tell, in a very up-to-date fashion. So every time there was a small change in legislation or proposed legislation, they updated it. And now it's most updated with the final passing of the bill that was passed on December 20th. That was reconciled. So these are, again, this is not a substitute for you doing your taxes, obviously, and this isn't tax software that you're going to file with, but this will give us a really good indication of whether your taxes for next year will be up, down, or flat. So, John, for you, from what I can tell here, you're going to save under the new tax plan about $1,000 as over the course of 2018. So yeah, the standard deduction is what it looks like you're going to be taking, and your tax bill, from what my calculators tell me, it's going to go down a little over $900, almost $1,000, which is a big deal. Now, I think the other question I've gotten on this, and I did a Facebook Live. So if you go to Facebook, or if you go to Wes Moss Money Matters, I did a Facebook Live on this and got tons of questions too. Remember the savings when it comes to when you're looking at your taxes, John, it doesn't obviously happen all at once. It's really just a cumulative number. So over the course of next year, you will save about $1,000. It doesn't happen in one paycheck. And this goes for almost everybody listening. It's not going to just happen all at once. It is a slow and gradual tax cut that you will see if you were to calculate what your taxes, let's call it in a vacuum, relative to last year would have been. You'll have seen the savings play out over the course of the entire 12-month period of time. So don't spend it all at once, not necessarily dramatic, but listen, $1,000 is $1,000, John, and you start multiplying that. Yeah, God bless. God bless. And if you add that up over the course of millions of Americans, you're going to see about $120 billion in tax cuts on the individual and family side. That doesn't count corporations. Well, what's that going to do for the economy? Huh? Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.